Good afternoon, traders. This is about about 3 hours since I spoke to you last, and I'm coming on because I'm going to really run this by you quickly, and so you can completely get a great understanding of trading the futures and understanding price. So I'm going to get right to it, so you guys can get a good idea. This is your opening this morning, 94. Okay, why is 94 relevant? It's an anime. Okay, then we rolled, and from a strategic standpoint and a true trade with upside potential is always going to come from one of the most significant locations, and that is the 200. Okay, and I talked about that in the morning before we got there. In fact, when I made the video, they bounced off of it right after and I missed the first push. But this is what you got to take a look at and understanding price. And here's the Nasdaq. I'm sorry, the Dow, and the Dow was kind of hovering around its S1. Okay, while we were still dealing with the opening range, and then they rolled. Okay, came back up again, and then they rolled. And I'll get back to the Dow in a second. So we rolled, and we came back down to 200. I missed this one. I was making a video from a like once again from a bullish strategy, not even a bullish strategy, just from understanding the location. It's an oversold market that's still relatively in a positive trend. So you have to be looking for the opportunities here to get long. I mean, you got to ask yourself when you're trading. I mean, when the markets are up here, 40-40, and you're still looking for opportunities or 40-30 for longs, I mean, you got to say to yourself, what is my risk reward? And if you're making money up here for the small risk reward, and that's great. But I think the potential to get hit is harder up here. But the opportunity is always down here. And here's a perfect example. So the second one after our video, I took this long right here, and that was quick 10 handles. They rolled over and they stopped me out because I am looking for this to bottom out somewhere down here and the potential for to start kicking back into this gap fill. I don't know how much of this is gonna retrieve, but there's gonna be potential because the market still momentum is still relatively to the upside. It's just another lower opening, and it's an opportunity for value and for people to get on board for even if a short-term loan. I mean, not even if it has to be a long-term long. So and then now see this white line right here, this is 75, and we kept hovering around it. And I missed this again. I missed this shakeout. I didn't take anything in here, and they shook them out here. They shook everybody out, thinking, oh, we're in trouble. We're under the two. Made a new low. They came back up to 75, tried to roll them one last time, and they rebuilt. I took this long up here around 72 and change, 72 or better, and I parked, and I'm just playing what I'm seeing. And here again, you could see how the market price is hovering around 75. And the Dow was kind of, look at this. See how the Dow is kind of meandering here as well. So you're kind of waiting. And here's our S1 where they came down from. So here it is. And then lo and behold, right here, you got this was another opportunity to get on board. If you didn't get on board around 77, 77 and a half or better, and you got this huge volume spike down here, they meandered again, and the struggle now was the 94, which I had pointed out earlier. Here's the arrow. Here's the 94. That was the 9MA. And look what happened at noontime, like clockwork. And a lot of times at noon, they usually tend to buy them up at noon. And look at that, look at that surge. They just exploded right through 94 up to, well, actually, this is 94. This was the first volume surge right here that jammed it from 82 up to the S2. And look at how they hovered at S2. And they're telling you something right here. They're holding on. And now the challenge is 94 to 9MA. And look what happens again. Another surge right at lunchtime. Boom. Right at 94 at DMA. and then they took them up to over 4,000. And for all intents and purposes, how you trade it, that's a monster trade. Now, I trade for the long term, so I'm leveraging a little more down at the MAs, and I'm moving my stops, and I'm paying attention to the trend and the momentum. And it hasn't shown me any indication from the minute it took off above 75. It never ever really retreated again. It held S2, took out the MA, got up to 4,000. I'm done for the day. I let my last one go up around 4,000. I'm not going to play out for the home run. It's just too much to ask for. I mean, there's still another 40 handles of gap. They could fill it. I don't know. You can play that way. You're just going to want to see now how we handle 4013. That is S1. And this thing could come and crawl back down to S2 and rebuild. I don't know. It could fold. But once again, this is about understanding value. And what's going on with my computer? I don't really know. Disregard. I hope I'm still running this thing alive, but let me get rid of this. I know my computer's really on a fritz here. Bear with me for a second. I don't know what's going on here. I got to move this stuff out of here. All right, so as I stated, we don't know what's going to happen in the afternoon session. So, as long as we stay above here, S2, if we challenge S1, anything could happen. I mean, they could just start building on it. And, what you got this morning was a follow through. This is this classic institutional movement. And then they jammed it all the way down to the 200, blew through it to get everybody leaning, and then they rebuilt. And trust me, this is the value locations. This is where the big money's coming in. And this is how you have to pay attention to it and trade with them and understand the price and why price is moving in the direction it is and from what locations it's coming from. And you can just see how you just kept pushing and pushing. Now, the markets can be challenged to take care of the rest of the business going up. So, this is just a follow through, and this is just to help you understand how you can, if you're going to get in these locations and you're going to trade multi, even if you just trade this for one push, it's fine. Your risk reward should be 1 to 1. So if you're going to buy it, I mean, you really want to give yourself at least three handles on huge locations, 3 or 4 handles, because you want to give yourself a little leeway. At the end of the day, if you're wrong, you're wrong. That's just the nature of the market. You never put your stops where they should get hit. You put them where the market should not go. And if they do blow you out, then you look for the opportunity to get back on board if the momentum and the trend returns or gets back into that same particular trade. But if you're trading multiple contracts, you can learn to understand the trend and its momentum by how it reacts to these locations. Okay. And this is why I continue to talk about the extreme pivots and moving averages and how unbelievably well it trades around these areas because the big money is paying attention to this. Okay. So it's in your best interest to pay attention as well. All right. That's it for the afternoon trade, guys. I hope you guys did well, and I will talk to you guys soon. Have a great day. Take care.